Mr. Bird, is a very good question. It's also a combination question between debtors and creditors, and you must make 100% sure that you can do this question. Mr. Bird is the owner of TV World, a family-run business that has been operating for over 25 years. The business has been very successful with an annual turnover exceeding 1 million rand. So what does that tell you? They should be registered for VAT. TV World is indeed a registered VAT vendor, and the VAT rate equals 14%. Very important, 14%. TV World's main source of income is the sale of televisions. Now, DVD players we don't get anymore, but that is not what is important. What is important is the principles that is being tested in this question. Stereo systems and other smaller entertainment items. TV World also has a large maintenance and repair division that repairs entertainment equipment for their clients. TV World sells to the general public as well as to larger entities such as hotel chains, conference centers, universities, etc. The entity uses the perpetual inventory system and maintains a gross profit percentage on all normal sales as follows. General public, 50% on the selling price. How does our profit formula looks like here? Cost plus profit equals selling price. It is 50% on the selling price. So the selling price must be 100. So what? There must be equal sign. So what is our profit? It's 50% on the selling price. So that means if I work backwards, then what is the cost price? The cost price must be 50. That is for the general public. Then for large entities, the markup percentage is 50% on the cost. So that means then that my cost must be 100. It's 50% on cost, so that means my profit is then 50. 50 over 100, and that will give us then selling price of 150 for large entities. It is the policy of TV World to take advantage of any settlement discounts offered by their creditors. That is important, and that is only a nice way of telling you that you have to make an allowance for settlement discount when you buy merchandise. Then, if an entity is approved to buy from TV World, so that's debtors now, on credit, a settlement discount of N3315 is offered. So that one is creditors. This one here, that equals debtors. Let's do it in a different color so that we don't get confused. Buy from TV World, a settlement discount of 3% is offered if they settle the invoice within 15 days. Then for sales to the general public, it is assumed that the discount will not be taken. Very important. For sales to larger entities, the assumption is based on past experience as to whether they will take advantage of the settlement discount or not. That is also important. That is to tell you that you don't have to create an allowance for settlement discount with every single sales transaction. You first have to look at the history and see whether this client has made use of the settlement discount in the past. Then I give you the following transactions that took place in June 2014, the last month of the financial year. Required. Prepare the general journal entries to record the above transactions. Journal narrations are not required. Now guys, general journal entries is not done in the accounting, what happened there? In the accounting equation format. So it is purely debit this account, credit that account with a statement indication. So please don't do that again. On the 3rd of June, purchased 50 televisions of various sizes on credit from Swallow Manufacturers a VAT vendor. Very important, because if he is not a VAT vendor, he cannot issue a VAT invoice. Therefore, then we cannot claim VAT. We are a VAT vendor, this guy's a VAT vendor, so we are able to claim the VAT. The settlement terms of Swallow is N30 for 10. So that means we have 30 days to settle the invoice, and if we do settle it within 10 days, we get a 4% settlement discount. The invoice price amounted to 273,600. Due to the size of the order placed, TV World was able to negotiate a trade discount of 5%. Now, what is important here? They give us the invoice price. Is the invoice price before or after trade discount? Guys, if you don't know it by now, you probably will never know that. Invoice price is after the trade discount has already been deducted. Good. The question also states that it is the policy of DB World to take advantage of any settlement discounts offered by their creditors. So therefore, it means that we have to create an allowance for settlement discount of 4%. So what is the first step? The first step is determine the invoice price. And we've already determined that, 273,600. So what is the next step? Let me just get here to the start. This invoice price, 273,600. Next step, take out VAT. Get the VAT exclusive amount. Break the VAT exclusive amount down into its two legs. 96% now will go to inventory. Why inventory? Because it is a perpetual inventory system. There it is, perpetual inventory system. And 4% is the settlement discount. 96% then have to go to my inventory. So inventory is the VAT exclusive amount, 240,000 times 96%, 230,400. If you said purchases, it would have been marked wrong. Allowance for settlement discount equals the 4% of the VAT exclusive amount, 9,600. The VAT that we can claim is the difference between 273,600 and 240,000, 33,600, and then creditors is credited with the full invoice value of 273,600. On the 5th of June, sold televisions to the general public for cash at a total selling price VAT exclusive of 43,400. Now, the first thing is, to the general public, there is no settlement discounts. They said here somewhere in the question is that for sales to the general public, is it assumed that the discount will not be taken. So what you have is what you see. Determine the invoice value of the sales, and that would be the 43,400 times 1.14, because this is the VAT exclusive amount. So let's do the sales transaction first. That's a normal sales transaction. Bank will be debited with a VAT inclusive amount. 43,400 times 1.14 equals then, let's put it there, 49,176. Good. The VAT will go to the VAT output account, 43,400 times 14%, and then sales will then be credited with a VAT exclusive amount, statement of profit or loss, 43,400. Remember though that this is a perpetual inventory system. So we have to adjust our inventory records with every sales transaction that takes place. That sale was done to the general public, and we have already determined that this is our profit formula to the general public. 50 plus 50 equals 100 because it's 50% on the selling price. So if we write down our profit formula, then it is for the general public, there it is 50 and 50 equals 100. If we have the selling price, remember it's always the VAT exclusive selling price. It is then a 43,400 times 50 divided by 100. And that gives us 21,700. So cost of sales is debited with 21,700 and inventory is credited by 21,700. The next transaction is on the 6th of June. They say 5 of the smaller televisions that were purchased on the 3rd of June, so some of this bulk that we've purchased here, were damaged and had to be returned. The cost of the damaged televisions after the trade discount and before that was 18,000 Rand. If they gave you the cost before the trade discount, you had to take the trade discount off in the first place. But they gave us the cost after the trade discount, which is correct. We were able to make use of the trade discount. Before that, 18,000. So our first step is to determine the value of the credit note that was issued by the supplier. And the value of the credit note was 18,000 times 1.14. So we will debit our creditors account with that amount of 2520. Now remember, settlement of that invoice has not yet been taken place. So therefore, we have to adjust this whole entry as is with this amount of goods that we've sent back. That means we have to adjust our allowance for settlement discount, as well as our VAT account, as well as our creditors, as well as our inventory with the value of the stuff that we have returned. So the VAT exclusive amount times 96%, that is what we've done initially, VAT exclusive amount times 96%, that we posted against inventory. Instead of debiting inventory now, we are going to credit inventory. So inventory on the credit side, the VAT exclusive amount was 18,000 times 96% equals 17,280. We initially also took the VAT exclusive amount and multiplied by 4%, and that we posted against our allowance for settlement discount creditors account, 9,600. So now we have to do the opposite. So our VAT exclusive amount is 18,000 multiplied by 4%, and that will now be credited against our allowance for settlement discount creditors account. The VAT will be the VAT included on the credit note. So 18,000 times 14%, 2520. Now you can either argue that you're going to rectify your VAT input, but if you've posted it to VAT output, I would have marked it right as well. So now we have recorded the returns transaction. On the 11th of June, purchased maintenance and repair materials for cash with an invoice price of 18,810 from Robin Repairs, and Robin Repairs is not a VAT vendor. So can they issue a VAT invoice? No, they can't. Robin Repairs offers settlement discount terms of N3215. It is the policy of TUWIL to treat such purchases as an expense. Oh, they have to. Now, the first thing is that you have to determine the invoice value. Because the invoice value is 18,810. That was the amount that we bought for cash. So that is the cash flow that took place, 18,810. And we are not allowed to claim any VAT on that. So bank would have been credited with the amount that we paid in cash, 18,810, and our maintenance and repair expense account statement of profit or loss would have been debited with 18,810. On the 12th of June, settled the amount owing to Swallow manufacturers. Now, remember, we have to determine, number one, what is the amount we're going to pay them. When we bought that merchandise, it was on the 3rd of June. What are their settlement terms? Their settlement terms is, I'm entitled on 4% discount if I settle that within 10 days. 3 plus 10 equals 13 June. When did we settle it? We settled it on the 12th of June. So they paid within the settlement period. Are we going to pay the full outstanding creditors amount? No, we're not. We're only going to pay 96% of the outstanding creditors amount because we're going to make use of the 4% settlement discount. Now, remember, this transaction was not only this one on the 3rd, but the one on the 6th also pertained to that transaction there. So we have now gathered that we have settled this account in the settlement period. So we're only going to pay 96%. The second thing is to work out how much do we actually owe this guy. Initially, we owed him 273,600, but then we debited his account with 2520, which then is the returns transaction. So the amount that we owe him is the difference, equals 253,080. So that is also the amount we want to debit against the creditor's account in order to take out any outstanding balances. So creditor's debit with 253,080. The amount we're going to pay him is the outstanding amount, 253,080, multiplied by 96%, equals 242,957. So that is going to be in our bank, 242,957. What is the difference between the 253 and the 242 that we actually paid? That is the settlement discount that we have received. Have we made provision for the settlement discount already? Yes, we did. Here it was allowance for settlement discount, which we did adjust here with the 720 Rand. What was the percentage of the allowance of the settlement discount that we've already recognized in our books? 4%. How much were we able to utilize? 4%. So basically, if we're going to take the allowance out of our books now, we have catered for the full 4%. What is the allowance amount in the books? It's a 9,600 less the 720. So I'm going to credit our allowance for settlement discount account with an amount of 8820. And that equals 4%. So I don't have to make any further adjustments against inventory. So once I've taken out the VAT exclusive 8880, which equals 4%, then I have to pay to the receiver of revenue VAT output based on 14% of the 8880 equals 1243. And then you will see that your transaction will balance back to the 253,080 that I initially owed this guy. On the 16th of June, one of the entity's large clients, Pelican Resorts, who's a VAT vendor. Now, does that make any difference whether they are a VAT vendor or not? No, guys, it doesn't make any difference. Why not? Because if I sell to any person, I have to pay over VAT. They were refurbishing some of their hotel rooms and had approached TV World about purchasing 30 new television sets. They agreed to pay by check. You can do that EFT. That's not the issue. If they were given a discount on the selling price, TV World agreed to sell the televisions at the normal selling price less 15%. On this day, the televisions were delivered to Pelican Resorts and they issued a check or they made a payment of 232,560. Okay, now, what does the 232,560 represent? It represents the amount that they paid for this television sets that they have bought from us. That 232,560, is that a normal selling price? No, it is a normal selling price less 15%. So let's record the sales transaction first. Remember, it was done, I've received the money. So bank was debited with this amount of 232,560. There it is, 232,560. Sales would have been credited with a VAT exclusive portion of that amount, 204,000, and VAT output would have been that times 14% to 28,560. So the sales transaction is straightforward. However, we now have to adjust our inventory record because we are working with a perpetual inventory system. It is a large entity. So for large entities, this is our profit formula, 100 plus 50 equals 150. Now there are two ways that you can do this computation. We can start here, and I think this is the easiest, and I would recommend this one, but I will show you the other one as well. My normal selling price, my normal profit formula is 100 plus 50 equals 150. Did I sell to this guy at the normal price? No, I sold to him at the normal price less 15%. So 150 times 15% is the discount that I gave him, 22.5, not 15. 15% of the selling price of 150 equals 22.5. So that was the discount that he received. So the selling price for him was 127.5. So if we have to reinstate our profit formula, our cost price can never change. If I paid 100 Rand for an item, I cannot change that fact when I sell the item. So I paid 100 Rand. So the 100 Rand cost price will always remain the same. However, what did change? Our selling price have changed to 127.5. So if I want to make this equation balance, it means that my profit formula, my profit margin on my cost price have come down from 50% on cost to 27.5% on cost for this equation to balance. So I have my new selling price, VAT exclusive, 204,000 times 100 divided by 127.5, and that is the amount I'm going to adjust against my inventory, credit inventory 160,000, debit cost of sales 160,000. So this is the one way that you can go. You can adjust your profit formula to account for the drop in the sales value. The other method that you can use is to retain my normal selling price formula, but I have to convert my actual selling price then to a normal selling price. So we know that this 204,000 Rand was our normal selling price less 15%. So that means it is 85% of our normal selling price. So if I take my 204,000 and I've divided by 85%, it would have given me a normal selling price of 240,000. If I have a normal selling price, I can apply the normal profit formula. So 240,000 times 100 divided by 150 also gives me 160,000. So you could have worked it out both ways. Number one, either adjust our sales price to a normal sales price and apply the normal sales formula, or adjust our normal sales formula to our actual sales formula and apply that to the actual selling price. Both of them will give you exactly the same answer. Great. On the 30th of June, repairs for the month were all done on a cash basis. The amount of cash received for the month amounted to 96,900. Cash received always include VAT. So remember that I'm not allowed to post this income stream with my normal sales revenue stream. This must be posted to its own account, cannot be posted to sales, and it must be shown in my income statement as other operating income. It is not shown as part of my sales revenue. So the amount that we've received is 96,900. That's fairly straightforward. Bank debit 96,900. Our repairs and service fee income would have been credited with a VAT exclusive amount of 85,000, and the VAT included the 11,900 would have been taken to our VAT output account. Then they say at year end, on 30 June 2014, the total debtors according to the debtors control account amounted to 191,520, and the allowance for credit losses as at that date was 8650. Now, I wanted to draw a T account, and the allowance for settlement discount had an opening balance of 8650. They say it was discovered that the debtor, which is not a VAT vendor, with a balance of 14,250, doesn't matter whether he's a VAT vendor or not, had gone into bankruptcy. On the last day of the year, the liquidator sent a check for 60 cents in the rand. He has already sent the check, so we have received the money as full and final settlement of the account. So we only received 60 cents of 60%, in other words, of 14,250. 40 cents is going to be written off. So let's do the computation. Let's say here that we have received in our bank account 14 250 equals 8550. And that is straightforward. We've received this, guys. So we debit bank and we credit debtors with 8550. How much is still outstanding on his account? Basically 14,250 times 40%. $5,700. And that is the amount that we have to write off now. Now that 5,700 Rand includes VAT. So if we take out the VAT, it gives us 5,000 Rand that will be a credit loss, and our VAT equals 700 Rand. So let's account for the receipt of 8550. We are going to debit bank with 8550. We are going to credit debtors with 8550. Then for the amount that we are going to write off, the 5,700 Rand, 5,000 Rand, the VAT exclusive amount, will go to an expense account, credit losses written off, and we can claim the VAT on that. 500 times 14% equals 700 Rand. So you could have, and then credited debtors with 5,700 Rand. So you could have done that like here in a combined transaction, or you could have done two separate entries which have exactly the same impact. In total, you have to write off 13,250 from the debtors account, of which 8,550 comes via the bank account, 5,000 via an expense account, and 700 Rand according to that input. Now, they tell us here, at the time of the sale, that the sale was made, it was assumed that the settlement discount would be taken. Guys, what is our settlement discount requirements? We said that we will allow settlement discount if somebody is going to is going to pay the invoice within 15 days. When does the allowance for settlement discount expire? Either when payment takes place. Did payment take place? No. It only took place now, long after that sales transaction was recorded, so very long after 15 days after the invoice date. And number two, when the settlement discount period has expired. So no payment has taken place and the settlement discount has expired. So all I tell you here is that this entry was passed a long time ago. I'm not going to pass it now. This should have been passed in the books a very long time ago. Then they say the allowance for credit losses should be maintained at 5% of the outstanding debtors account at year end. Now, the only thing that we have done against debtors, they gave us the debtors amount there, 191520. We must remember that we have to pass that entry of 14250 to determine what is the latest balance on our debtors control account. Then we have to take out the VAT, then we multiply it by 5%, and this 7775 is what we want the allowance for settlement discount to be at the end of the financial year. Remember, we draw a T account and we put the opening balance in. So currently there is already 8650 in this allowance account. What do we want the balance to be? We want the balance to be 7775. So in order to make that happen, we need a credit or a debit on this entry, on this account. So we want to pass a debit so that when we balance off this account, the balance in actual fact will be the 7775. So we're going to debit allowance for credit losses 875. We're going to credit losses account or adjustment for allowance for credit losses in our statement of profit or loss. And you can clearly see that this is an income item in the statement of profit or loss.